Just wondering if we're seeing the beginning of a year-end sell-off right here with the price of oil a challenge, also spiking interest rates. Take a look at the 10-year right now. The 10-year is close to 5% again, and that's giving people an opportunity to say, okay, maybe I don't want to have all my money in stocks. Maybe I do need to go for some yield in fixed income. Is that what you're doing?
Yeah, that's exactly right. If you think about it, look over the course of the third quarter, stocks have basically been flat, and long-end bonds have sold off 15%. Right? What an extreme revaluation that we've seen between those two assets over the course of just a couple of months. That's going to put pressure on folks to rebalance out of stocks, move into bonds, take advantage of those higher yields. Not to mention the fact that you still have this tightening effect that could still continue to affect the equity market. Yeah. Very challenging time for stocks.
Here's the 10-year now, 4.647%. It's up 3.5 basis points this morning. Where does this go? What are you looking for in terms of this move? Well, how much higher can it go?
Well, it could certainly keep going higher. You still have cuts priced in a little later into 24. Those could come out, which could raise the bond yield. But the reality is the easy money's been made in bonds. Right? The real question is, look over at the stock market. Stocks have outperformed long-end bonds by nearly 60% over the last couple of years. That's unsustainable in an environment where we're getting late cycle, where we have these pressures on growth, not to mention all the tactical stuff about a government shutdown, strikes, et cetera, that you were talking about earlier.